Hello, traders. It is Sunday, March 8th, and it is still light outside at about 7 o'clock at night. So that's the good news. The bad news is I've been looking at the overseas markets. We're in for another big sell-off tomorrow. We've got about 120 point S&P 500 move coming right now. Number of different factors coming into play. Just want to give you an idea of what's setting up for tomorrow. We're going to see a really big drop on the open, and that should take us down to the low that we established on February 28th, somewhere around that 285 level. You can see that was the low of the day. We're looking at 120 points off of the close from Friday, which was at roughly 297 on the SPY. That puts us at 285. So let's see if there's any significance to that support level. We can go back. We can see that there have been some multiple bounces off of that level. I'm going to go into a zoom out feature so that we can see the big picture. 1, 2, 3, almost 4, right around that same price level, and it's around the 284 level. So there should be a little bit of support there. We've got some additional support down here, right around the 275 level. So we're going to have a nasty day. What's happening here? Why is this happening right now? Well, we've got the coronavirus continuing to spread. Italy has put a travel ban or a travel restriction on about a quarter of the nation's population. And the big issue for them is that tourism accounts for about 15% of their GDP. We already know that Italy has been on the ropes from a debt standpoint, from a credit standpoint. So we could see some really fragile economies go into a recession, and we could start seeing some credit concerns. That's my biggest fear, is that a lot of these companies, airlines, for example, that have a huge debt load to service, they need that cash flow. They're depending on it. They'll probably be needing government bailouts in some form or other as travel comes to a grinding halt. A lot of companies canceling their conventions. They're also asking many of their employees to work from home if possible. So that also is creating pressure on the economy as everybody stays home. They start really kind of hankering down. Now, OPEC said that they're not going to curtail production. Oil prices are down 30% overnight. So that could also be another credit issue. A lot of banks have a lot of exposure to the energy industry. So if oil prices start to collapse, we could see some problems with some of those companies. Net net, I've always viewed oil as a zero sum game. Yes, the stocks are in the S&P 500, so as they pull back, it weighs on the overall market, but you have consumers benefiting from lower oil prices. So their expenses go down, which means they'll spend more money. Also, the input costs for all the goods and services, that transportation component comes out. So it keeps prices relatively low. We've got a lot of high paying wages in the energy industry. That's a negative. So those people are going to be laid off as oil prices plunge. So oil is going to have a big impact on the market tomorrow as well. China reported that their exports are down 17% year over year for the month of February. So we kind of expected it was going to be a bad number for them. Their country basically shut down. I see that we're probably going to have a lot more corona cases in the next week or two here in the US because they're starting to test for it. They really haven't been testing for it. And as that number explodes, I believe that people are going to be a lot more fearful about it for at least the next 3 or 4 weeks. But then when everybody realizes that it's been here and it is around, and that 3% of the population is not dying, it's very important to remember that not everybody contracts coronavirus. And of the people who do contract it, about 80% of them show no symptoms at all. Their immune system fights it off. It's the other 20% that's problematic. And once those people are inflicted with it, yes, the mortality rate is fairly high. But once people start to see that coronavirus is alive and well and it's pretty much everywhere, after 3 or 4 weeks, I think everybody starts to settle down a little bit and realize that this is a really nasty virus and that there are things that we can do, personal hygiene things, to avoid it. Some people are going to change their consumption patterns. So this is going to have a economic impact. What the extent of that is going to be, I don't know. So let's zoom out, get back to a normal chart view, take a look at the market. We know basically where it should be able to find some resting points. I know that I always try and give you a trade or two in these videos. I'm having a very hard time advising you to do anything with the S&P 500 looking like it's going to open 120 points lower tomorrow. Gee, do I buy puts? They're probably going to be super rich, very expensive to buy. Well, do I try and buy calls on stocks on this big pullback and sell out of the money bullish put spreads like we've done before? I was looking for a pause last week around this 200-day moving average. We didn't get it. Let's go into that 5-minute chart. I do want to show you something interesting. Look at this rally that we had on Friday. That was almost 70 points, 70 S&P points. So if you take this low, we'll be about 50 points lower on the open Monday. But we've seen these big spikes on Friday, 2 weeks in a row, 70-point S&P 500 rallies. Is that a pattern? I don't know, but I'll start watching for it again this next Friday, especially if we have a very soft week to the market. So what do we do? What kind of trade could we possibly put on? Well, the stocks that I like shorting, I'd mentioned this in my video Friday, are the bank stocks. I think that as consumers start to constrict their behavior, I think the banks make less money. We're headed for a zero interest rate environment. They also do not fare well in that environment. There could be some credit concerns popping up. We don't know what their exposure might be to the oil and gas industry or what this might possibly do to global credit conditions. So there are a number of headwinds for banks. JPM is the largest bank, and it's one that I showed you last week as a good short. And you can see how it continued to sell off and it closed near its low of the day. Didn't get the bounce that the market did into the close. Let's take a look at that daily chart. So I think banks in general are going to be pretty decent shorts. Would I short it Monday morning on the open? Heck no. I'd want to see what is going on. Now, the trade that I'm going to have you look at and consider is Netflix. Netflix trades at a fairly high PE ratio, and the theory here is that everybody's going to watch movies and stay home, and Netflix is going to do really, really well. Well, that might be true, but here's the bigger play as far as I'm concerned. When the market's down so much and investors are nervous, they start looking at their whole portfolio and they start looking for things that they can sell. And when they go through their portfolio, they go, I'm not going to sell JPM, that's down too much. I'm not going to sell my UAL holdings, now that's down too much. And so eventually they come to Netflix and they go, let's sell some Netflix. That stock has really held up pretty well. We could sell Netflix, take some gains, and offset some of our losses that we've taken on our other stock holdings. So the baby eventually gets thrown out with the bathwater, and Netflix has held up extremely well. So I would advise you to watch this 360 support level right in here. If that starts to fail and we start to see some relative weakness in Netflix, it would tell me that people are looking for anything that they can sell that's actually been up, and Netflix could be one of those victims. So I would say yes, watch Netflix. You can also, instead of buying puts on it, you can sell an out of the money bearish call spread, and you can lean on this upper level right in here. You can see 390 is a very big resistance level, but I don't think you're going to get a lot of premium for that because the stock is at about $370. So you'd have to go 20 points out of the money on it. You could try and come in closer here, somewhere around the 385 strike, and lean on that high right there. And that might be a decent spread for you also. But first, you need to see the stock coming in. You need to see that weakness, and you need to see that investors are finally starting to sell the stock because they're looking for something that has not been beaten down yet. And so watch for that relative weakness. Well, how do we do that? Well, the 10SI indicator makes it easy to do that. You can see here it's above zero, so it's been very, very positive. On a 5-minute basis, we're going to be looking for that orange line to be down below zero and to stay down below zero. And if it can do that, then we'll know that it's weak relative to the market. You can also accomplish this with a SPY overlay. So you'll be looking for a situation where the market is rallying and the stock is drifting lower and lower and breaking below those technical support levels that I showed you. And so this is the biggest technical support level that I would be watching, is right around that 354 level. If Netflix drops below 354 and it has weakness relative to the market, I think you could see some prolonged selling down to these major moving averages. It just would be playing catch up to the S&P 500 and some of the other stocks. So that's the video for tonight. I just want to let you know that we are in for some weakness. I think the next couple of weeks we're going to see a lot of selling. I think the coronavirus is going to be a lot more widespread than people even realize right now. I think the number of cases is going to go up. So I'm not casting panic out there. In fact, I think it'll be the opposite. When people start getting used to the idea that it's been around and they need to be extra careful right now and do everything that they can not to contract it or spread it, I think about 3 or 4 weeks from now, people will start getting used to the idea that it's here, it's running its course, and hopefully by that time, it's starting to get contained and we have a clearer picture of what it might mean to us economically. I can't tell you to do any trades on the open tomorrow. I don't know what I myself am going to be doing. I'm going to be running a lot of scans. Almost everything I'm doing right now is just day trading underlying stocks with relative strength and weakness. And I'm closing my positions out during the day because we've had huge volatile movements both ways. So watch for that video tomorrow. If you like the content, please give it a thumbs up. Please subscribe to this YouTube channel and turn on your notifications because you never know when I'm going to be doing these videos. Good luck tomorrow. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.